And joining us now to share his commentary on the day's market performance is Martin Smith from Anchor Capital. Martin, thanks so much for your time this afternoon. It's D-Day, right? The Fed is in focus. It's almost certain that we'll be getting another cut. Markets pricing in 2 more cuts for the year. There's also been some focus on quantitative tightening. Do you expect any adjustments on that end? Fed Chair Jerome Powell, of course, hinting at the end of QT.
Yeah, so I mean, you can say with almost 100% certainty we'll see a cut tonight. I hope this doesn't get clipped up for a YouTube failed compilation later. And then you've got about an 85% chance that's kind of being priced at the moment of another cut when they meet at the beginning of December. So kind of 2 cuts all in. Look, people will say, yeah, you've got this government shutdown, so how do they have the data? But look, all of these members have their own economic teams and they are doing all the research on the ground. So they don't have essentially the official data, but they have proxies for what it should look like. So we think you'll still see 25 today, 25 in December, the 85% chance. Next year, maybe 2 to 3. We'll see how we get on. But like you mentioned, you've got a couple other things on the go as well. We are kind of very much in line with consensus on all of the above, and I think it's one that you've got to keep a kind of close eye on because everything can change in a moment with this economic data. But for now, it just seems like everything is kind of smooth sailing, which is famous last words.
And zooming in on the dynamics at play, particularly at the Fed, do you expect to see a divergence between the governors in terms of I guess how big that rate cut could be?
Yeah, I mean, that is also interesting. And then you've obviously got the Trump incumbents and all of those things playing their role. And look, they haven't been terribly far off of what the rest of the members have said. So it's not like everyone else is saying 25 and they've gone for 1%. So we might see a little bit of that dynamic at play, but I can't see anything more than a 25 basis points kind of overall decision being made.
All right, let's move over to other news making headlines. Now, today is being hailed, the biggest day when it comes to earnings, tech earnings in particular in focus, with Meta, Google and Microsoft out with numbers after markets close. What will you be looking out for when it comes to those numbers? I mean, big concerns have been around AI spend. There's also been worries about an AI bubble. Just going through some headlines overnight, I did see that Apple just crossed the 4 trillion mark when it comes to its market cap. Nvidia making headlines as its market cap nears $5 trillion.
Yes, I mean, exactly what you're saying is what we saw kind of across the market last night. While the S&P and NASDAQ were up, if you look at the kind of equal weighted S&P, the market was down last night. And it just speaks to the fact that growth and AI are just kind of first and foremost on everyone's list at the moment. And that momentum is just going and going and going. And I think that's going to be the theme for these earnings results. I think, like you mentioned, AI, CapEx spend, I think also cloud services, I think will be another big part of it. But cloud services, AI and CapEx, I think are going to be the 3 biggest kind of focuses across the tech sector earnings results tonight. Look, we still think that Meta and Alphabet are relatively reasonable from a valuation perspective, but we like all 3 of them and we hold all 3 of them and we'll continue to hold all 3 of them. But like I said, I think a big thing at the moment, again, is the AI, cloud and CapEx and how that CapEx spend impacts margins, and because obviously at some point it has to yield something, right? So that's going to be the focus. But at the moment, the momentum is just so strongly in favor of growth and AI focused stocks. It's very difficult to see it come to an end anytime soon, but let's see how we go.
And shifting focus now to the mining sector, where Glencore was out with an update. Over the 9-month period, they have recorded a decline in copper output. But over the 3rd quarter period, we saw an increase in output. Taking all of that into account, we did see the company adjusting its forecast. Let's talk about what's driving that and what it suggests about production moving forward. Is Glencore just managing, I guess, investor expectations at this point?
I think potentially, but I think it also comes down to, and I spoke with my analyst before, and the word that he used was copper seems to have found a bit of a trough. So obviously it didn't have a great kind of first half. It feels like we've started to see a little bit of a turnaround. You've got the trading business of Glencore doing kind of a bit better than guidance, than initial guidance had kind of put out there. So if you're seeing that play out, and again, the copper side of the business starting to turn, you could see a nice turnaround story. Look, Glencore is one that is an attractive share, because I think on the long-term view, you've got a very green focused share with nickel and copper and cobalt and all of those types of resources, which is very focused towards a green energy market, which is where we're heading towards. So I think they're well positioned. It just also depends on what happens to copper prices. I think that'll obviously be a very big kind of determinant of things, but it seems like things are starting to turn around, and hopefully from here they can kick on.
And before we get into our stock picks clip, Astral, they've flagged stronger full-year earnings helped by improved production efficiencies and better poultry sales. This seems to be something that's been playing out across the board when it comes to these poultry players. And I ask myself whether it is sustainable, because that, of course, being a very, very volatile industry.
Yeah, absolutely. I mean, it's very, very cyclical, but we think that it can continue. And I think you mentioned at the beginning of the show that it implied a very, very good second half. And what it actually implied for the second half was 66% HEPS growth, which is a very, very substantial number. Look, the share price hasn't reacted much, because I think we've seen a lot of price action in the last couple of months, up about 30% in the last 2 to 3 months on the share. So looking positive from that perspective, we think that momentum can continue. And I think another driver into next year will be, you've got yellow maize prices and soy feeding costs also coming down. So obviously that's also quite a nice kicker from an earnings perspective. So we think it's looking good from a momentum perspective, and some of the drivers going forward into kind of FY26. But like you mentioned, it is one where you have to be a bit cautious given the cyclicality and volatility of the inputs and the sector as a whole. But for now, it's been a good news story for the business, and yeah, well done to them.
They're clucking on. Let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
Yes, so I'm choosing a bank, Absa Bank. So I've been quite bullish on the South African banking sector for a while. I mean, like we spoke about earlier, the interest rates are coming down. We're seeing we saw the recent regulatory filing showing that the appetite for credit is increasing. The loans and advances are growing a little bit faster at 6% for the banking industry as a whole. So those are the kind of the tailwinds. I think that our bond yields have come down already, which is another sort of when you're looking to value a South African stock or a banking stock, you often value it off the long bond yield, which is a lot lower now than it used to be. And I think that Absa has some specific tailwinds in that it's got its new CEO, Kenny Fiechley, came in. We're expecting the appointment of the head of the retail bank imminently, so hopefully that will be another positive data point. And I think that it's at the top of the list of my SA banks at the moment.
Pick n Pay, as I said, better gross margin, better visibility on their longer term targets. And I mean, the bottom line about Pick n Pay is that the shares that Pick n Pay owns in Boxer are worth 20 billion. The Pick n Pay market cap is 20 billion. Everything else you're getting for free. You're getting the 4 billion of cash for free. You're getting 800 stores. You're getting clothing. You're getting liquor. And so what the market is telling you is that all of this other stuff is worth nothing. So I think that you're getting free optionality that Sean fixes this business. And I've said before that I think that he is likely to be successful.
SA Inc. stocks up for analysis there with Absa as well as Pick n Pay. Your thoughts around those counters?
So Absa is one that we really like. I think valuation-wise, I think it's looking very attractive. Mentioned their new management team. I think you've also got a little bit of a kind of lower base from an earnings perspective. So very much on board with the Absa call. I think it's a great stock at these levels. Pick n Pay, a little trickier because you can understand the value proposition there, but I think you do have to be a little bit cautious around the mass mart story and how that'll impact things. So a slightly more nuanced answer on Pick and Pay, but ABSA definitely a tick for me.
All right. What else are you liking? What's your stock pick today?
So Bookings Holdings is my stock pick. I wish I'd done the show yesterday because it's up 4% after hours, which is a bit frustrating for the segment. But it's a stock that we've liked for a while. It's come off a little bit in recent times, which I think has provided quite a nice entry point, around about a 20 times multiple, growing at about 15%. And they're also buying back about 4.5% of their shares every year. So quite a good story metric-wise, and also I just think a very well run business, kind of high return on capital, and yeah, one that we think is a nice entry point to these levels.
All right, so bookings.com, one to look out for. Martin, thanks so much for your time and sharing your insights with us this afternoon. That was Martin Smith from Anchor Capital.